Real estate is local. Everyone can look at all of these stats and overanalyze which market they want to get into, but it's all about actually being able to execute on that business plan, having those relationships, knowing the people, knowing the market. It doesn't matter what your spreadsheet says if everyone thinks of you as a jerk and doesn't want to work with you, right?
Hello there, everyone. Welcome to Planet Wealth's amazing podcast. All right, so today's guest is more proof that resilience can be turned into opportunity. He's a CPA, multifamily investor, and co-founder of TLP Investment Services, where he specializes in transforming value-add acquisitions in Cincinnati's real estate market. His journey started with front row seat to the 2008 housing crisis. Yeah, I get that one. Watching his parents navigate those turbulent times. And that experience lit a fire for financial education in him that led him to dive deep into self-learning and ultimately into real estate investing. Fast forward to today, he owns over 100 units, co-GPs more than 500 across Ohio and California, and leads the Cincinnati real estate fractional community, a thriving network of 200 plus investors. And when he's not closing deals, you'll find him in the boxing ring, championing health and wellness as a coach and athlete ambassador. So welcome to the conversation, Mr. Ian Cruz. Ian, you ready to have a chat?
Yeah, excited. Thank you for having me.
Well, welcome. All right. So I got to just kind of go back to the 2008 situation because many of us who are old enough to remember as adults that situation, which was a doozy in itself. Tell me that story. You talked about having a front row seat and how it impacted your parents. Take me through that.
Yeah. So, number of stories with my mom, investing. Well, first of all, what you learn in real estate is if you hold stuff, I mean, the mistakes will be made, but if you hold stuff for the long term, eventually time will win out, right? So there were mistakes made in some projects, but owning some real estate in the Bay Area, is overall going to be a good investment, right? Some of the mistakes that she made during the time were investing in what she thought were fix and flips and secured notes, with a friend that she trusted. Those notes were not secured. They were not actually taken or recorded or anything. They were just Word documents. And she thought she was investing in properties, in Saratoga. Since you're familiar, Saratoga and San Francisco. And when things started to go south, we later found out that that person, um, he could no longer pay. He later went to prison even. So, um, tough lesson learned. And as I was in college at the time, kind of too wanting to know what was going on, but not really fully understanding. So, um, I studied I studied economics. I got into accounting. I mean, another reason why I got into accounting is because my mom also left her software career and she opened up a yoga studio in 2009. So she needed help with the book, so I was helping her with that as well. But just trying to be, helpful on that front in terms of managing her finances. She owns, I think we just learned so many things throughout the experience to the point where when I was of age to start buying property myself, I'm asking all these questions that are like, what's negative amortization? Like, what is there going to be a balloon on this loan, right? These terms that were on loans that you would see back in '08 that really shouldn't be for a first time home buyer, right? So, it made me read the fine print and it made me, try to think about, how to prevent these types of mistakes, which can be paralyzing at first, right? But over time, we started thinking about, what to do with another one of my mom's rental properties, and we also wanted to 1031 it into multifamily for her, and I became kind of the fiduciary and the person behind that transaction with a little bit of scarring from 10 years ago, but, like,
Yeah.
knowing that I was gonna be very, diligent because of that. I joined a lot of communities, basically, I caught the bug with real estate investing at that point. Wanted to learn everything that could go wrong, but also everything that could go right when you do this well, right? So, yeah, I mean, that was a start. It can get you scared for a while, but I'm glad that we've gotten over that as well, and we take our lessons from it.
Isn't that amazing? Those opportunities, those situations absolutely give you a springboard to either be afraid and run away and do something else, or be afraid but face it and figure it out. Right? Hence, you're now in more of the education side. So I understand completely. Most of the time, it's personal necessity, right? I got into an agency. I was an accidental agency owner, right? I had things that I knew how to do, and people started asking me to do them for them, and voila, I have an agency. Had no clue how that worked. But that's what happens when we have someone we want to help, and especially in this case, your mom, it just basically allows you to, create or tap into a set of skills that you are acquiring, but also a passion for helping people. So how did that then translate into the education component that you also are passionate about?
Yeah, I think that's just kind of part of my core. I don't wanna spend too much time talking about, like, boxing or things like that, but outside, when I
Oh,
was
go ahead.
yeah. When I was going through all this, I watched my mom leave her career to pursue, small business entrepreneurship, and when you're a real estate investor, that's essentially what you are, right? And I wrote my application essay to UCLA, and I wrote that I wanted to have this corporate career, which I didn't know what it was gonna be at the time, and I wanted to, on the side at nights, moonlight as a boxing instructor, right? The boxing wanted to own my own boxing gym. Ended up spending a lot of time at a nonprofit. I actually helped with a transition when the original owner passed away, unfortunately, to the next owner, helped oversee that whole transaction. And it kind of guided me into coaching. And one of my sayings in coaching was each one teach one. Right. So always trying to help. And a lot of that, that stuff was all volunteer. Right. So I had my career. My career, by the way, was accounting, which kind of, it's almost like real estate. I fell into it because I I was reading all these documents trying to figure out what happened. Accounting, I kind of fell into as well. Spent over a decade in my career there, and then also focusing on boxing and stuff like that. But because of that, right, you have like that. I had something in me where it was like, okay, now I want to get into real estate more full time, and I have this entrepreneurial mindset and the skills from the accounting to go ahead and make the transition into investing.
Yeah. But, one of the things I know about entrepreneurs is there are 3 components to create success, at least, from what I've seen in many over 300 interviews that I've done in podcasting about entrepreneurship. And, uh, and that is it starts with a mindset. If you don't have a mindset to do what you wanna do, the skills won't follow, right? So you have to have and you had that mindset. The next stage is actually what I call innovation, and I don't think of innovation like the Steve Jobs and the Elon Musks of the world. I think of innovation as us taking our previous experiences, every one of us, what we've done, whether it's college, whether it's boxing, whether it's helping your mom with real estate, any of those things, and you look forward to what you wanna do next, and you innovate that based on your previous experience. So that's exactly what you did. You took your real estate knowledge based on helping your mom, you took your finance background, your CPA, your accounting background, and your boxing education, and you put that together and innovated entrepreneurial real estate investing. So tell me what that looks like. Show us what that looks like to take that innovation. How are you innovating real estate investing with that past, applied to this future?
Yeah, yeah. Great question. And I'm going to tie in something that I didn't fully answer, which was the education piece, right? So I'd say that all of these pieces of my background make me uniquely me, which allow me to run my
Okay.
business, my real estate practice, my investing in the way that's authentic to me, which I love doing. Part of that is in focusing on a market that I like to focus on and become the local expert in, and that's very important, right? Because real estate is local. Everyone can look at all of these stats and overanalyze which market they want to get into, but it's all about, actually being able to execute on that business plan, having those relationships, knowing the people, knowing the market. It doesn't matter what your spreadsheet says if everyone thinks of you as a jerk and doesn't wanna work with you, right? So there's so much more to it, and part of my journey was I spent a lot of time networking, and maybe this was something that was missing from my accounting career where I felt like I was using one side of my brain, and then I was using the other side in being a coach on during nights and working with kids and helping people, but, after over a decade in kind of that career box and box that, out life outside of career box, I started pursuing my investing, and I took people along on the journey. I mean, people will say stuff like, "Oh, you're like, it's part of capital raising or investor relations," but it's very authentic to me to share our experiences, share why I like investing in the market that I invest in, share the people that I know, build a community of people. At this point, over 200 people that are looking into Cincinnati that trade notes, and then a more private subset of that, there's 26 investors that I've helped out to close on 276 units in the market. Um, and within that, we just talk about everything that we learn, right? Everything that's very specific to that market, who we work with, how they're doing. There's a lot more reputational risk for those vendors or those parties to work with us at this point because it's not just Joe Schmo with his duplex and unrealistic expectations from San Francisco, right? Because honestly, people in other places don't like that persona, right?
Yeah.
They don't, necessarily want the person who well, first of all, they have all these local relationships with people there that they see. They have bigger investors with higher door counts and more units, more revenue, right? And then they have somebody that's just a high stress kind of person with, one unit that read a bigger pockets book and thinks that they can call you at all times of the day, right? So I think what I did was I brought together a community of investors that wanted to learn about this market. I showed them everything that I know. We traded, we crowdsourced everything. I have a list of all the PMs in town with a list of all of our community and who's used who, so that if we want to reference check different people, right? We just trade those notes. So it really benefits everybody. And some people operate in this mindset where it's like, oh, you invest in this market, I invest in this market. We're gonna compete on the same deal. I can't trade in. It's kind of like the scarcity mindset. But I have a very, there are a lot of people where we've competed and been in best and final on a deal, but then afterwards we're calling each other like, "Hey, like how the heck did you get insurance on this thing?" They've really tightened up their standards. Like, what are you doing now? Who's your broker? Like, my guy is, uh dropping the ball right now or something. So being able to foster that community has helped a lot. And yeah, it's just part of the business, and it's part of the way that I do business, right? To educate and bring people along on the ride.
Yeah, that is so perfect. Thank you for sharing that because that fits right into that innovation idea. Because there's no one like you. That there's no one that has the previous experience you have. So even if people think they're competing with you in a deal, they're bringing a completely different experience to that, and you are. So the person who's best suited to handle that deal, to secure that deal, it's based on that previous experience and the way that they apply that to that specific deal. So it's not really a competition. It's two completely different personas, if you will, if you want to put that word on it, but different innovation that are going for the same deal, but the one who is positioned with that experience, with that innovation, is the one that's going to secure it. And that doesn't mean it's competitor, that means it's the best person to secure that deal. That's the way it works with innovating. And so you might not be best suited for the next deal because of whatever previous experience that person brings or whatever innovation that person brings. And there's, that's how we look at the world. That's how we apply ourselves to different situations based on those glasses. It's like colored glasses. We look through the lenses. We only have our previous experience to look through the lenses with, right?
Mhm.
Yeah. So how do you then, with that education, I know you have ways that you take people through processes. I think you talked about a field trip, so to
Yeah.
speak. Tell me more about that.
Yeah, so I'll share quickly before the field trips, I joined some communities are really strong, right? Like, if you try to do everything on your own, it may not go as well. When you have a lot of like-minded people, when I wanted to run marathons, joining a running club was the best thing for me, right? And it's the same with real estate. And I attended a field trip to Atlanta through a group called Subtle Asian Real Estate, which is aimed towards helping really the millennial demographic of Asians that may have been taught to chase prestigious, jobs, that there are other avenues to building wealth, right? So entrepreneurial avenues to building wealth. So we attended a field trip to Atlanta where I met a group of people that we just decided afterwards we're going to call each other every week and talk about what we're doing, right? And that trip changed my life, right? That took you know, the many years of reading every book and not doing much to like, okay, every week we have so many action steps going forward out of this. So I started to host that field trip as well, being part of various communities. My own community through fractional.app over in Cincinnati and also SARE. So we host that field trip annually, and it's about 20 people. This is gonna be the 3rd time that we host a field trip. Um, there's a component of networking with the people on the field trip because that's what made a huge difference in my life, to be able to meet like-minded people, and then also networking with people in the local community. So we go ahead, we tour neighborhoods, we check out, um, we get to meet different property managers, different realtors, investors, things like that. I've done it's mostly real estate related, but I know that there's interest in different things, right? So some people want to get into Airbnbs, some people want to get into single families, multifamily. We do something that's non-residential commercial as well, but we just touch on all of those areas. People definitely get a lot. It's like a boot camp. And then we also try to make it fun at the same time. We do it during Oktoberfest, which is funny enough, but Cincinnati has the largest Oktoberfest in the US.
Really?
Yeah, they have a huge German population. So
Yes.
I try to time it with that. Um, and yeah, we have fun and we learn a lot, and it's led to a lot of great things for a lot of people.
Wow. So it sounds like really it's very much a local personal relationships building kind of event, right? I mean, this isn't just a like digital marketing where it could be anywhere with anybody, but
Yeah.
like you were talking about, I mean, real estate, and I think we were talking about this offline as well. You mentioned it. Real estate isn't a solo sport, right? It is
Mhm.
definitely a group, or at least you need support to be very successful. But
Mhm.
more specifically, we're talking about community. We're talking
Mhm.
about being able to empower local investors. So how do you identify that ability to empower local investors and also offer value add opportunities in competitive markets like Cincinnati?
Yeah, so, to clarify, a lot of people that attend the field trip are coming from, like, California, or they are coming from out of state. We tour basically it's to get to know Cincinnati. There are people that leave that field trip saying, "Hey, I want to buy a fourplex for myself," right? Or there are people that leave that field trip saying, "Hey, I want to invest in this person's project," right? But we give everyone the tools. Like I'm strangely enough, I'm not just I invest in Cincinnati, but I'm passionate about the city as well. I'd like to see, there are a lot of out of state investors that just don't do things the right way. We try to do things in a very, very good way. But yeah, so people will be active, they'll end up being passive. Sometimes the people know my projects, but I'm not, this isn't some trip where I'm just trying to show off, I actually don't spend enough time showing my own projects. So I've showed some of the other good local operators that do great work in the city. And people will take what they may of it, right? But it is to build connections. There are local operators. I've done a ton of diligence on everyone in that town. And there's some people that do some really great work and providing good quality living for tenants. So,
Yeah.
yeah, it's kind of both directions there.
Yeah, but it sounds like someone could, let's say, go to this field trip and learn about that local environment and see how that works, but then take that knowledge and that the way you presented it and the people you introduced them to, and then go back to their community if they're not from Cincinnati and look at their community differently, look at their local environment differently so that they can look for those same types of resources in their local environment if they also wanna invest there, right?
Yeah. Yeah, definitely. We're very I mean, investing out of state is difficult, right? So it makes you kind of it's actually good because it makes it so that you can't drive by the property whenever you want, right? And sometimes if you are investing locally, you're tempted to do that kind of stuff. So when you are investing out of state, first of all, you need the right people, but you need the right systems in place, right? So we talk about both of that, how to identify the right people, which is harder to do when you may not ever see them, but ideally see them. That's why I've made such a great effort to travel to the community that I invest in and shake people's hands and actually get to know them on a personal level rather than just be that guy that calls when things are going wrong that they
Right.
can't put a name to face, right? So, how do you identify good people, build relationships? I mean, those are the soft skills that don't show up on a spreadsheet, like I said. And then, how do you set up systems? And investing out of state forces you to build systems. It's so much more important than, self-managing something locally, which has its pros and cons because you know the local market very well, and you can drive to your local property, but that can be both good and bad, right?
Right.
Yeah.
Right. Wow. Yeah. So, I mentioned the two out of the three things that most entrepreneurs need to be successful. I mentioned mindset, I mentioned innovation, and the third you just touched on with your spreadsheet and your systems, and that's a strategy and tactics. Right. That you start with mindset, which is like 30,000 feet. You're thinking about things. You're thinking about how you can think about things.
Yeah.
Then you're kind of coming down to innovation. Maybe that's 10,000 feet. You're getting a little closer to actually actions, but then strategy and tactics, man, the rubber meets the road. You're ground level. You're making things happen. So we already talked about innovation. It doesn't mean you have to do this in order. We talked about innovation first, but what about mindset? What role does mindset play in wealth building, and how have you cultivated it to be resilient during your own journey?
Yeah, this business, particularly real estate investing, will beat you up. Um, my a person that mentored me along the way, he said, "You have to like pain to be in this business." And if I used to be a boxer, then I turned to a marathon runner, so I think I do like pain.
You like pain? Yes, I was gonna
But
say,
you
boy.
really become very it teaches you something about yourself, right? When you handle all of these situations. Um, there's a lot of things that can go wrong. And yeah, I mean, I feel like all the kind of tenant issues that you can deal with, we've dealt with. delays, timelines, permitting. There are just so many things that can happen. Financing on a recent deal, um, having your hard money at risk, things going over budget. These things are all going to happen, but they're all learning experiences. And as I started at the top of the podcast talking about my mom's experience, you have to take these lessons and learn from them. Even when I did the 1031 with my mom's 10 years later, we ultimately got a good property, and it was cash flowing a lot more than the single family that she had. Um, but, she was on the 1031. There was a seller who wasn't the most honest person. They said that they were going to finish turning one of the units before they close, but they have no incentive to, right? And you're on that 180-day timeline. So you deal with these things. Um, but overall, you're going to be in a better place, and you learn from every mistake that you have, right? So the bigger mistake is just not taking action, right? So yeah.
Wow. Mindset. I think boxing and marathon running definitely build resilience. I can't. There's only a few others that might be as resilient building activities as those, right? I
Yeah.
mean, the whole idea of taking your punches and coming back.
Yeah.
How could that be any more an example of resilience? And running, boy, pushing through.
Yep, you gotta finish. Or yeah, it's tough. And then on a most recent deal, I mean, I know a lot of, like, the larger multifamily projects, not necessarily in the Midwest, but in a lot of projects, you're learning a lot about GPs and operators when things get tough, right? And you're seeing every I mean, I there are cases of really bad operators, right, who underwrote way too aggressively. They thought interest rates were gonna be low for really long, but nobody could have projected interest rates to go the way that they have. So I don't fault people necessarily for being off in their projections. I mean, I've seen operators who they're actually beating their pro forma, but it comes time to refinance, and, like, cap rates have expanded so much that things aren't great. And that could be like a warranted cap call, as long as the operator is very transparent about what's going on, right? But I've seen everything other than that as well, right? I've seen, you know, GPs pretend, they're taking pref equity, but then they're still raising for another deal saying, "Hey, we're not facing any capital calls." It's like, well, you kind of are having deals that aren't performing, right? I've seen that. I've seen, you know, lack of communication. I've seen all types of stuff like that. So we've fortunately been pretty good with our deals, but we when times get tough, we want to be sure that we're always communicating with our LPs. We had a lot of toughness with a Class C deal, just getting financing, and we definitely put our money where our mouth was to make sure that we could close on time as GPs. Um, Sometimes you see GPs not do that, right? So, I think, yeah, uh, yeah, I think tough times are where you see what people are really made of.
Yeah, and it builds that resilience. Again, everyone has their point where they experience all these things and they either throw their hands up and say, "I'm done,"
Yeah,
or they are resilient and keep moving.
yeah,
That's there are always those choices.
mhm,
But if you're gonna keep moving, you're gonna have to innovate things. You're gonna have to figure things out. You're gonna
yeah,
have to figure out how to do things a little bit differently than maybe someone else.
mhm.
So yes, boy, I'm sure your boxing and both marathon running and have definitely helped you figure that out. So looking ahead, what trends or are there any trends that you see in real estate investing that excite you more now? And how are you preparing to capitalize on those trends?
Yeah, it's an interesting time for sure, right? Interest rates went up a few years ago. They've kind of been up for a while. We did an agency deal recently, but it was like a scattered site, smaller portfolio of buildings. The financing there was a little bit tough because it was borderline, agency lenders are getting a lot more strict on the quality of asset, and this is a value add deal, so we knew that there was gonna be work. Um, but I think, it's just a really, really interesting time because there are some deals in some markets where people are getting stuff at discounts, right? Because some operators are out of time. The Midwest historically, because it has healthier cash flow, you're not seeing as many distressed deals. You are seeing some. They're finally starting to pick up. Um, so there may be some pockets of opportunity, but obviously the people that have been doing things consistently, not aggressively, but consistently in the last few years will be in the best position to take advantage of those opportunities. When we talk about real estate broadly, just to be clear, I'm looking at sub-institutional value add multifamily deals. So I'm not talking about residential deals. Residential deals, I do see that there's this narrative of the supply demand equation for the first time. Supply is it's starting to become a seller's market, um, or buyer's market. Sorry. Um, I'm not sure how long that's going to last. I think things are tough to predict. I think with us going through our most recent deal, just following the 10-year treasury, because I refresh that because our rates are dependent on the treasury, right? And, like, just seeing the volatility there, you're just like, "Oh my god, what is going on?" Right? Like, um, so, residential deals, I'm not sure necessarily. There are probably still gonna be some pockets of opportunity when things are soft. Um, you just have to be disciplined in your offering criteria and write good offers. If they're disrespectful offers, then go ahead and write those offers. You never know what's going to happen. The last, I want to say, I mean, the last like 4 or 5 deals that I've done, we come through as a backup offer because somebody fails to close. I mean, that's always been our value proposition, that we have the capital, we have the financing, we're certain to close. And when somebody just tries to take the highest offer from an out of state investor that's never been to that market and that person gets cold feet, then we come in, at the price that we originally underwrote it for. And sometimes that process takes a while. I mean, there's a property that I'm watching right now, and this guy has listed it with multiple brokers. I don't know what he's doing. Eventually he has to come to grips with reality. And sometimes, things get stale, right? So maybe the price that that person would have gotten to begin with is different than it'll be now. So you just have to be consistent. I think it's a funky time in the market. Those funky times are going to have some opportunities, just as long as you're consistent. And then when they're there, if you've been consistent in the last few years, consistent but not just aggressive, like unnecessarily aggressive, because then you'll be out of dry powder. That's when things start to fall into your lap, right? So, um, our deals that we look for are sub-institutional value add multifamily, so below $20 million deals. Sometimes, more specifically, I like the 10 million and below multifamily deals. The reason why we like that is because, a lot of people go for the big syndicated deals with on-site property management, um, economies of scale, right? And if you can do that, those are great, but those broker deals are gonna have a certain level of competition where there isn't that much, um I mean, there is. They're good, and if you invest with a good operator, but, they're broker, they're gonna get bid up. CBRE isn't selling to you at a discount, right? So, they're gonna do a good job of getting a good buyer there. And then the residential stuff can be really competitive as well. But we think that, let's say, 10 to 80 unit multifamily space that has
Mm.
it's too small for on-site property management, but you can get, you know, third party property management will also struggle with those kinds of assets. We think that those are assets that we want to take on, right? So,
Mhm.
we have in-house property management, and our last deal was within a mile of both the property manager owner's personal home. It's within a mile of another 100 units that we manage. It's within a mile of the property management company headquarters. Um, we have such a concentration in that neighborhood that we feel like we have, you know, the perfect fit for this deal. And you alluded to it earlier, right? Like that deal was really meant for us. And actually, to get back to the stories about competing with other people and kind of having that scarcity mindset. I mean, honestly, I was competing against my friend from LA on that deal. We were in best and final together. I was like less than $500 a unit below him, and we were like, let's just go up and get this thing. And we were better suited to manage this anyways. Like, I would rather make sure, there's a saying, you want to buy. I think we bought this at a great price anyways, but um you want to buy a great asset at an average price than an average asset at a great price.
Great
Or
price.
the
Yeah.
quote's about businesses, right? But I
Yeah.
mean, it's the same.
Mhm.
It's the
Same
same
thing.
thing. Was that Charlie
Yeah.
Munger, right? But um, like, we kind of have that mindset. We know operationally we're gonna knock this out the park, and it's a number of small multifamily buildings, so we can sell them off
Mm.
individually. We have
Mhm.
exit options.
Yeah.
So yeah, that's kind of what we go for.
Yeah, that's fantastic. Yeah, I love that, because you just tied it all together for us, right? In one conversation. So, any last words of advice for, anybody wanting to start building their portfolio? Any last piece of, advice or wisdom you can provide that person?
Yeah, yeah. I'd say either so get to know your market well or get to know people that know your market well.
There you go.
Yeah.
There you go. Yeah, I mean, and it is all about relationships. It's
Yeah.
all about relationships and building your own reputation. I mean, that's what
Mhm.
you talked about, having all those properties within a mile of each other. Uh, you start building a reputation with the people in that area knowing you as the owner of that property. So the more you build that reputation, the more favorable you might be looked on, as long as it's a positive relationship. And like you said, you don't like completely, mess it all up, then you're looked at as a valuable resource and, contributing to that community. Website, social media, and all the resources from this conversation, everyone listening, they're all going to be included in the show notes, so you'll be able to check out Ian and everything he's doing, make it easy for, you to find and connect with Ian. So thank you so much for spending this time with me and sharing your insights, your look toward the future, and giving us a little glimpse as to what is working well for you now and what you're headed for. Um, I very much appreciate you spending this time with me. Any last thing you'd like to impart to the audience?
Yeah, thank you for having me. Feel free to stay connected. My information will be in the show notes. And if you're ever interested in learning more, just feel free to reach out.
Thanks for watching. If you enjoyed this episode of Planet Wealth Fortunes of the Brave, check out our other videos for more insights and strategies to elevate your financial freedom. You can subscribe right here and hit that notification bell so you never miss an update. Join our community and take your financial future to the next level. I'll see you in the next video.